Hey there, future millionaires and financial aficionados. We've got something special for you today. A deep dive into what to do with $1 million that doesn't involve the basic Lambos and golden toilet seats. Here's what the smart millionaires spend their money on. And if you're smart as well, you won't want to miss it. So, whether you've just hit the $1 million mark or you're still working your way up, stick around because we're about to break it all down for you. 1. Real estate, the millionaire's playground. When you have $1 million to invest, one of the most tried and true options is real estate. It's a tangible asset that often appreciates over time, and it can provide a steady stream of income. With this amount, you could consider purchasing rental properties, such as single-family homes, multi-family units, or even commercial spaces. Investing $1 million in rental properties can yield an annual rental income ranging from $50,000 to $100,000 or more, especially if you choose prime locations near city centers or business hubs. The added benefit is that as you receive rental income, the property's value may also increase over the years, enhancing your overall wealth. 2. REITs, real estate. Without the hassle. For those who prefer a more hands-off approach to real estate investment trusts, REITs, offer an attractive alternative. REITs allow you to invest in income-generating properties collectively with other investors, and professional managers handle the day-to-day operations. This option relieves you of the responsibilities associated with property management while still offering the potential for steady returns and capital appreciation. Whether you're not interested in hands-on property management or simply want to diversify your real estate investments, REITs can be a smart choice. 3. Bonds and CDs, slow and steady. Wins the race. If you lean towards conservative investments, bonds and certificates of deposit, CDs, may suit your risk tolerance. Bonds involve lending money to entities, such as corporations or governments, and receiving fixed interest payments along with the return of your initial investment when the bond matures. On the other hand, CDs offered by banks require you to lock in your funds for a predetermined period, typically offering a higher interest rate compared to a standard savings account. While these investments may not promise rapid wealth accumulation, they are relatively low risk and serve as a means to preserve your capital over time. 4. Don't be a saver, be an investor. Parking your $1 million in a traditional savings account is not a prudent choice. In the long run, your money will lose its purchasing power due to inflation. For example, if you leave $1 million in a savings account for a year and earn about $100 in interest, your real purchasing power would decrease to $975,600 due to the erosive effects of inflation. To protect and grow your wealth, it's crucial to explore investment opportunities that have the potential to outpace inflation rather than relying solely on saving. 5. Gold and silver, the age-old safe bet. Gold and silver have served as stores of value for centuries, making them appealing options for investors looking to hedge against economic uncertainties and inflation. These precious metals have the advantage of retaining their value over time and often perform well during periods of market turbulence. You can choose to invest in physical gold and silver by purchasing coins or bars, or you can trade them through various platforms. Gold, in particular, tends to thrive during times of economic instability, making it a popular choice for those seeking to preserve their capital. 6. Index funds, Warren Buffett's favorite. Warren Buffett, one of the world's most successful investors, frequently recommends index funds as a way to build wealth over time. Index funds, like the S&P 500, offer diversification by bundling a wide range of stocks into a single investment. Over the long term, the S&P 500 has delivered an average annual return of nearly 10%. The power of compound interest can significantly multiply your initial investment, making index funds an appealing choice for those with patience and a focus on long-term wealth creation. 7. The power of education. Before diving into any investment, it's essential to invest in your financial education. Reading books like Money Master the Game can provide valuable insights into the world of investing. Understanding various investment options, strategies, and risk management techniques is a critical step toward making informed and successful investment decisions. Investing in your financial knowledge can help you navigate the complexities of the financial world more effectively. 8. Stock market. Roll the dice with caution. The stock market offers the potential for substantial wealth creation, but it also carries inherent risks. If you're interested in investing in individual stocks, start small and learn as you go. Numerous trading platforms, such as Robinhood and eToro, provide easy access to stock markets. However, it's crucial to approach stock market investments with careful research and risk management to avoid significant losses. Educating yourself about how the stock market works and understanding the companies you're investing in is vital. 9. Start your own business. Be your boss. Starting your own business can be a rewarding path to financial independence. $1 million can provide a solid foundation for your venture. However, it's crucial to have a well-thought-out business plan and a willingness to put in the necessary effort. While it may take time to see substantial returns, owning and growing a business can lead to financial success. Remember that success in entrepreneurship often requires dedication, perseverance, and adaptability. 10. Angel investing. Help others soar. Angel investing involves providing capital and expertise to startups in exchange for equity. While this venture can be both exciting and risky, it offers an opportunity to support innovative entrepreneurs and potentially share in their success. Angel investments typically range from $10,000 to $100,000 for seed-stage businesses. To succeed in angel investing, it's crucial to select startups that align with your expertise and actively support their growth to increase their chances of success. 11. Venture capital funds. Diversify your risks. Venture capital funds provide a way to diversify your investments in the startup world. By pooling your money with other investors, you can spread your risk across a portfolio of startups. While some investments may not yield returns, others may thrive, potentially delivering substantial gains. When exploring venture capital funds, consider your financial capacity and the minimum entry requirements of the fund. Diversifying across multiple startups can help mitigate the risks associated with early-stage investing. 12. Bitcoin and blockchain, the digital frontier. Bitcoin and blockchain technology represent the digital frontier of investing. Bitcoin, often referred to as digital gold, has gained recognition as a store of value and a potential hedge against inflation. To get started, you can purchase Bitcoin through various trading platforms. However, it's essential to understand the underlying technology and market dynamics before investing. Resources like online courses or financial news outlets can provide valuable insights into the world of cryptocurrency and blockchain. 13. Peer-to-peer lending. Be the bank, sort of. Peer-to-peer lending allows you to act as a lender and earn interest by lending money to individuals or businesses. This investment option typically offers higher potential returns, often in the range of 12 to 20%, compared to traditional savings accounts or bonds. However, it comes with higher risks, as the borrowers may default on their loans. To mitigate these risks, careful selection of borrowers and platforms is essential. Additionally, it's crucial to diversify your peer-to-peer lending investments across multiple loans to spread risk. 14. Art. Investing in beauty. Investing in art, particularly blue-chip art, has proven to be a profitable choice over the years. Blue-chip art refers to works by renowned artists that have consistently appreciated in value. While it can be a rewarding investment, it requires expertise or assistance from platforms like Masterworks.io to navigate the art market effectively. Investing in art not only offers the potential for capital appreciation, but also allows you to own and enjoy tangible works of cultural significance. 15. Franchise businesses. Get that global brand. Investing in a franchise business can be an excellent way to leverage a well-established brand and business model. While it typically involves a substantial initial investment, franchises provide brand recognition, operational support, and training. Choosing the right location and franchise opportunity is crucial to success. Franchising can offer the potential for profitability and entrepreneurship with the added advantage of working within a proven business framework. So, folks, it's important to remember that there is no one-size-fits-all approach to investing, and diversifying your portfolio across different asset classes can help manage risks and optimize returns. Golden toilet seats might be enticing, but your investment choices should align with your financial goals, risk tolerance, and time horizon. Subscribe to our channel for more intelligent advice, and we'll see you next time.